Ladies and gentlemen, you will not be surprised to hear from me that the short-term charts are very weak for Bitcoin right now. But I want to remind you all, we're seeing weakness in the short term after a 41% move to the upside. But the big question remains, do we see this short-term weakness materialize into medium-term and long-term weakness? And that is why we're looking into the Wyckoff distribution chart. That is why we're looking into the total cryptocurrency market cap at very major resistance. And that's also why we're paying very close attention to the events over the next 2 days in regards to ETF decisions and also FOMC. Big stuff to discuss, and I come to a very concrete, very clear conclusion towards the end of the video, so stick around for it. Ladies and gentlemen, leave a like, comment, subscribe. Let's get into it. Before we get into anything, check out the Telegram VIP group. On Telegram, we post VIP trading signals. So trading signals include swing trades and scalp trades, so medium-term and short-term trades. And you can go to the information group in the description below, which is the one I'm showing you on the screen right now, which shows you all of the kind of information you need to know about the membership, the pricing details, what you actually get, the 30-day free trial, and also the results historically, which gives us an 80.58% win rate over the past year of trade. So that's bloody excellent, to be honest. So get on there if you're interested. All that information's in the description. Without further ado, we'll get into the update. Now, I do have to apologize. I've got a little bit of a sore throat, so this video might be a little bit shorter than usual, but we'll see how we go. So as for medium-term developments, we do know, and this has been for quite a while now, about a week, we've moved above the critical green box you see on the screen here, which is kind of a dividing line, the line in the sand for Bitcoin between the price action we saw in 2021 and the price action we saw throughout the entire bear market. So it's great to see that Bitcoin is above that level once more. Obviously, there are some bear cases we need to look into in a second, but ultimately we're above that level right now, and we're in a new pattern. We're above that level, we're in kind of this bullish pennant formation. Which is a bullish pattern, because a bullish pennant formation, of course, is what we're doing right now, where you move up into a triangle and you generally see a leg upwards from there. So technically speaking, the formation we see on the screen is bullish. However, I do want to just quickly emphasize that even though the formation itself, the structure itself, the pattern itself is bullish, like we see on 4-hourly chart here, bullish pennant formation, I do want to also emphasize that it's not actually a completely valid formation yet. So it's a speculative formation. It's a formation that we haven't seen perfectly valid yet, because we haven't seen a total of 5 retests. We've only seen 4 retests, and so these lines are actually very, very speculative. They're not concrete at all. So although we have a speculative pennant formation here forming, which is bullish, overall, it's not actually a valid formation yet. And overall, if we're looking at things like volume, we have sharply decreasing volume in this upwards trend ever since the 24th of October. So for the last week, we've seen decreasing volume in this upwards trend, which is bad. And we have a very strong resistance line on the RSI, as you can see at 89.25. This red line on the RSI, you can see that we've rejected from over and over and over and time again on a daily chart since April 2019. We've never gotten above it. We've rejected from that once more. Not only that, we've formed a bearish divergence where we've seen higher highs in the price chart and and lower highs on the RSI. So I think overall right now, if we're being completely honest, I would say that the Bitcoin chart on the daily chart perspective and the 4-hourly perspective, even though that bullish structure is technically forming, technically it's invalid. And secondly, we're seeing dramatic signs of weakness here. And that's not necessarily a bad thing, okay? The weakness we're seeing, yes, it is weakness. Yes, technically on a surface level, weakness is bad. But the weakness we're seeing is coming after a move from 24.9k straight upwards 41%. Okay, people don't realize, because they get the numbers a little bit mixed up, and they don't really understand how big the move is. We've seen a 41% move to the upside since September 11th. Okay, since 24.9k, 41% move to the upside. It is completely normal for Bitcoin to be seeing some sort of exhaustion in the price chart. And the exhaustion we're seeing really is not really some sort, it's actually quite a massive amount of exhaustion. I would not be surprised at all, okay, if Bitcoin breaks downwards from this speculative pennant or forms something new, or does, some sort of double top formation or something like that, breaks down and retests this green box for support, and then flips that green box and goes upwards from there. That would be a very, very healthy correction. That would be a correction of around 8%. Very, very healthy. Honestly, quite much needed at this point. Now, the only thing that keeps me on the fence about it, okay, because I'm bearish right now. I'll say that right now. I'm bearish on the short term, okay? But on medium term, long term, I'm very much bullish. Short term, I'm very much bearish. But I'll tell you right now, the only thing that's kind of keeping me on the fence about this situation, and the reason why we're stagnant at this price point instead of going down, the reason why I've been going sideways in wake of all the bearish TA, is for two reasons, really. We've got the CPI coming out in 16 hours. CPI historically has had pretty significant short-term effects on Bitcoin. We have an 98% chance of a freeze to rates, no more hikes, and so that's obviously a relatively big deal, but given the fact that it's a 98% certainty, I don't think that it's massively affecting the charts right now, because it's very well, the consensus is very much there, unless we see a shock decision. That's not really going to much is going to occur there, but that's probably one of the reasons why Bitcoin's paused. And then the other reason, the more important reason, is the ETF approval speculation, as you can see by the headline. ETF approval speculation heightened ahead of SEC meeting. We've got SEC doing a closed-door meeting reviewing the Grayscale ETF application in roughly 36 hours. And so technically speaking, we could be seeing an approval, right? This is technically speaking and idealistically speaking, we could be seeing approval of the Grayscale ETF application within 36 hours, or it could be rejected, or it could just be postponed. Okay, so that's probably the main reason why Bitcoin is going sideways here. All right, there's obviously a degree of the seesaw effect. And what I mean by that is when you see, basically I like to think of the markets as a seesaw. Imagine one side there's a bull, on the other side there's a bear. In order for the market to flip back bearish after it's been bullish, the seesaw has to spin back, right? And at the moment it's neutral, it's kind of flatline, and so the bears are taking control. It's shifting towards the bearish side, but it's not quite there yet. That's just how market momentum works. But ultimately, I think that there will be a stagnation in the price chart until we see some clarity on that ETF decision, some clarity on the FOMC decision as well. So it's not surprising that we're going sideways here. I think we will form a new market pattern, a new market structure. I don't think that this market structure of a bullish pennant formation is going to be the final structure. I think we need to be seeing a retest of something else, or something else form here. As I said, we've only seen 2 retests on either side, which doesn't form a valid formation at all. In fact, as I said, it's highly speculative. So we'll have to wait and see what occurs in that regard. But yeah, we've made ourselves very clear about our opinions on short and medium term. I think that short term specifically is leaning bearish right now. There's a lot of indicators pointing that we go downwards, but I don't think that's going to be bearish for long term. I think that as long as we're above this green box here at 32k to 31.7, we're actually in a very healthy position, and we could very well see a very healthy resistance support flip there and go upwards from that point. So although short term is not looking good, there are decisions on the horizon that will lead to short term volatility. That will give us clarity on the situation, and as long as we're above a support box here, it's actually not that bad at all. Ultimately, it's not bad to see stagnation and bearishness after a 41% move to the upside. So yes, there is weakness, but it's not the end of the world. And getting into that weakness a bit further and expanding that weakness to different time frames, we can look at something like Wyckoff distribution. Okay, so this is kind of the bear case at this point in time. You guys might be familiar with Wyckoff by now. We've seen Wyckoff occur many times in Bitcoin's price history. We saw Wyckoff accumulation patterns, for example, back here in May 2021, and also back here down in 2022, and they both played out quite well. So Wyckoff is something that has had a degree of accuracy, a degree of reliability on Bitcoin in the past. You can't really discount Wyckoff. But you can discount Wyckoff when it's not really showing exactly what you got on the Wyckoff plan. Okay, so we have Wyckoff distribution. I've mapped it out on the chart right here. As you can see in Wyckoff distribution, you're meant to see 3 separate highs of equal height, right? Of equal increasing height. Now that would have put Bitcoin at about 32k for a peak, but instead we've come up to 35, almost 36k on some exchanges for a peak, which could in fact just invalidate Wyckoff just straight off the bat. So I'm not actually particularly happy with the assumption that this is a valid Wyckoff distribution pattern, not only for the reason of us seeing a dramatically higher high, although that is one of the reasons, but also because I don't think it's reasonable from a TA perspective to ignore everything that's happened in this breakout just because we have some sort of resemblance to one aspect of TA, which is Wyckoff. You have to understand that TA, when you get into making arguments, because all I do on YouTube, right, is I make an argument. The market's either going up, down, or sideways, and so I have to make a case every single day. I have to make an argument every single day. I have to utilize the evidence every single day. There will always be conflicting evidence, always, okay? But it's about what argument is stronger. Now, to me, what argument is stronger? Is the argument stronger that we've broken above a major, a resistance zone that we've seen as resistance for, since May 2022, we've broken above that level. We've broken above a 1,000 day long resistance line. Let's go to logarithmic and draw it out. 1,000 days of resistance broken to the upside. That's a 1,000 day resistance day break. A break of a resistance zone that's lasted for 18 months. We've also seen RSI weekly chart break, that's lasted for close to 3 years. What's stronger? all of those cases, along with many, many more that I've discussed in the past and you guys will be aware of by now, along with the fact we've seen a 41% move from the recent low, along with the ETF bullish narratives, are those stronger, or is the speculative Wyckoff distributions, a pattern that we're seeing here that doesn't actually really look like a Wyckoff distribution pattern? Which one is stronger there? Which argument is stronger? It's like you have to weigh up the arguments. And to me, the answer is obvious. Of course, the bullish argument is stronger. That doesn't mean we throw out the Wyckoff distribution pattern. That doesn't mean we ignore it entirely. It means we monitor it and wait for it to become more valid before we take it seriously. Now, what would give this pattern more validity? What would give the bear case right now more validity? Well, we need to drop below a critical level. We need to drop below 32K, right? We need to see it start to play out. We need to drop below the recent second high at 32K. If we do that, if we drop below 32K, then we can start to think, okay, this actually looks more like the pattern, and all of the bullish things that we saw before have been invalidated, and therefore this is valid now. But until then, it's not actually really a valid pattern. It's just something we're looking at and monitoring in case it progresses to be a valid pattern. And this is the same that can be said about another bear case we have right now, right? The second bear case is the fact that we saw, or we have similar levels, okay, on total cryptocurrency market cap, this chart here, which measures the entire dollar value of cryptocurrency market, and the Bitcoin chart. You can see the green level on Bitcoin lines up with the red level on total cryptocurrency market cap as the supporting line in 2021 for the bull market, that when we finally got below, we entered a bear market from, that we rejected from it a few times in order to get above it, right? The fact of the matter is, and I know I'm not making sense here, I'll explain it a bit further, the total cryptocurrency market cap is still at a major resistance zone that Bitcoin has broken. And given the fact that these charts are connected, the fact that total cryptocurrency market cap is at that resistance zone while Bitcoin is broken above it could be an indication that Bitcoin has moved up too far and needs to retrace back below it. Okay, that's the bear case. I, as well, for the same reason I don't necessarily support the bear case in regards to Wyckoff, I don't support this bear case either, because I recognize that in the past, okay, for example, on the breakdown of this box, we saw the breakdown on June 6th in Bitcoin, we saw the breakdown on total cryptocurrency market cap in May 23rd. So the fact of the matter is we've seen these charts move at different times, right, beyond the same level before. Who's to say that that's any different to what we're doing now? Okay, so I would actually say that given the fact that total cryptocurrency market cap has moved beyond and above this level in the past at separate times to Bitcoin, it is not hence the end of the world that total cryptocurrency market cap is lagging behind Bitcoin, even though it's at resistance. All right, now, I do think that, for example, we could see Bitcoin see, as I said, a short-term, medium-term correction, which could lead to correction on total cryptocurrency market cap before breaking it to the upside. But ultimately, I don't think, much like the Wyckoff distribution pattern, I don't think that this bear case is completely valid right now. I think we need to monitor it, just like Wyckoff distribution. We need to monitor it, and we need to wait for more evidence before we take it seriously. And that's kind of the general gist of my entire analysis right now. I think that the bull case, okay, as I have thought for a long time now, the bull case is stronger until it's proven not to be. And we just haven't seen any evidence of it ever, for the last year. We just haven't seen any actual concrete evidence that goes beyond speculation, that is confirmed, that says that the bear case is stronger. Every single time we've tested critical levels, every single time we've come down to 24.5K, that major line in the sand, and tested it, we've bounced. Where's the bearish validation? It hasn't existed for a long time. And that leads me to be bullish on the market from a longer term perspective. Now, as I said, I'm not saying that Bitcoin can't go down short term. I think it probably will. Okay, but I think it obviously relies on these events here. But I think if you're looking at TA alone, it probably will. I'm just saying that in order for these actual longer term, significant bear cases to be valid to any extent, we need to see evidence for them. We can't just be taking them at face value. Evidence is required. I want to move into monthly now. We've seen, the best monthly candle close on Bitcoin, okay, since the November bottom. All right, in the November bottom, as you can see on monthly chart we're looking at right here, we saw a very strong bullish candle, a very strong bullish engulfing candle. That was a very strong close. We've seen that to a similar level, in the last couple of days with the monthly candle close. We saw a bearish rejection from this yellow line, went downwards. We saw a very, very strong bullish candle to the upside, completely wiping out that previous high. That's a very bullish thing. We've also got Bollinger Band compression that has only ever happened, right? It's only ever happened to this extent, right, over here. All right, and over here, and if you look at when those two periods in time in the market were, they happened before a big explosion to the upside, a big bull run. We're seeing Bollinger Band compression, and if we're following historically, we could be seeing a big explosion to the upside, over the course of the next, well, obviously with the bull market coming up after the halving. So to act like the charts are bearish on a longer term basis, based on these bearish speculations, right? Because that's what they are. They're speculations, they're theories with no actual supporting evidence. You're being intellectually dishonest. And that's the simple reality. So monthly chart looks very good. We've seen a very good monthly candle close, broken above that yellow line. We've seen Bollinger Bands progressing very, very nicely in the monthly chart. Obviously, Bollinger Band compression can happen for a very long period of time before it leads to anything. So that's not to say we're going to go to the upside even further right now. But it is to say that cyclically speaking, over the course of the next couple of years, we're going to look very good on the monthly chart. And weekly charts, a similar story. We saw, this Gaussian channel. We didn't break the center line. We actually rode the center line for support the entire time. Now we've jumped right back above it. We've sprung back above it, and we've seen two consecutive very strong bullish candles above the bull market support band. So that's another very good sign as well as the fact that we've seen a very good breakout on weekly chart RSI. Which we had a weekly chart RSI descending resistance and also a weekly chart RSI descending wedge formation that's a little bit more valid. We've broken that to the upside as well. So I'm basically sitting here saying, and this will be my conclusion, we'll actually get into these YouTube comments tomorrow. I think we've discussed quite enough today. Basically, my overall opinion, you probably gathered it quite well from this video. My overall opinion on Bitcoin right now is this. Short-term looks rough. Short-term TA looks trash. There's no way around it. Now, the short-term events that are happening in the next 36 hours, including FOMC and the ETF decision, could mix up the short-term. So short-term is hard to take with any degree of validity right now, especially since we don't actually have a solid structure yet. But the momentum indicators certainly indicate downwards price action. But if we see that downwards price action, it's not a problem because we have major support and it's very healthy to see a correction after a 41% move. And the bear cases, they do exist. They do need to be monitored, but they're not to be taken seriously as of right now until there is extra confirmation. We've seen a great monthly candle close, and that's about it. That's my conclusion for Bitcoin right now. So guys, thank you for watching the video. I hope you enjoyed it. Please check out the Bitget and Bingx exchange before you click off. Bingx exchange is a global non-KYC exchange, and Bitget exchange is a global exchange minus the USA and minus Canada. That is KYC. So based on your geographical location, your preferences for KYC, you can sign up to either one of these exchanges with my referral link to get a 15% trading fee discount, as well as access to an exclusive rewards center. I've handpicked these exchanges for you guys. Basically, I've reached out to them. They didn't reach out to me. That gives a degree of authenticity. I've used Bitget for close to 2 years. I've used Bingx for close to 6 months. And I think they're both good exchanges. They're both good for different things. So go ahead and sign up with those using the referral link below for those trading fee discounts. And then Crypto Academy, if you're interested in becoming a trader, you can do the Become a Trader 10-unit course. It's in the title, Become a Trader. This course teaches you everything you need to know about TA and trading. And you can check out all the information on the website, as well as throw us an email at cryptoacademycourses@gmail.com, and we'll get back to you with all the payment information. Guys, thank you for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.